Major economies around the world have begun to slow down, with some even entering technical recessions, which are considered to be two periods of negative growth. It's been driven primarily by disruptions in supply chains related to global events and high interest rates imposed by central banks to rein in inflation. Emre Boz explains.
Following the end of World War II, Germany made major strides in its economic growth. It was called the German economic miracle, or Wirtschaftswunder. By 1958, industrial production was 4 times higher than 1 decade ago. And by the 2010s, Germany experienced its employment miracle, creating 7 million jobs between 1998 and 2005. But today, Germany is a shadow of its former glory, struggling with increased energy and raw materials prices and mass public sector strikes. This was made worse by the European Central Bank setting interest rates to all-time highs of 4% back in September last year. As consumer spending declines, so too does Berlin's GDP, which fell 0.3% in the fourth quarter of 2023.
The prices are still about 50% higher than they were before crisis levels. And they also are still twice as expensive as, for example, US energy prices. So that still puts German companies at a disadvantage on the global market scale. The bigger issue here is all the issues on the Suez Canal and all the attacks on the supply chain, i.e. on cargo ships and tankers, that are an issue for the supply chain and increase costs and uncertainty.
Other economies in Europe, like the United Kingdom, have already slipped into technical recession just months ahead of general elections. Gross domestic product fell 0.3% in the final 3 months of 2023, following a 0.1% contraction in the July to September period. Readings from all the main sectors, including manufacturing, construction, and wholesale, show them to be the biggest drags on growth. The slowdown was also due to rising interest rates, which are being kept at 5.25% in order to control inflation. Meanwhile, Japan, formerly the world's second-largest economy, lost its spot to Germany after weaker consumer demand and government spending triggered an economic decline for 2 consecutive quarters last year, also hitting a recession.
After almost 5 years of growth in Japan, Japan officially entered again in recession, but which is a big deal for the Japanese government and Bank of Japan as well. But the thing what happened, that there was a very weak in personal and consumption, internal consumption in Japan, and there was a fall in government spending.
As major economies around the world continue to slow down and tensions in the Middle East escalate, more economies may find themselves in the crosshairs of a recession. Emre Boz, TRT World.
For more on this, we are now joined by Tim Water in Sydney. He is the Chief Market Analyst at KCM Trade. Thank you for joining us today. Right, so the UK slips into recession, and that's a tough backdrop for the year ahead, especially for Prime Minister Rishi Sunak, who has promised to boost growth. How has this happened, first of all?
Good to be with you, Ludovica. Well, that's right. I guess the root cause, if you will, would be these historically high interest rates that the BOE have had to set to tackle inflation. And obviously that has ramifications for the real economy and economic growth, and we've seen that now with the technical recession. So I guess what we're seeing with the BOE and the UK's technical recession right now illustrates the dilemma faced by a lot of central banks around the globe at the moment, which is how do you fight inflation while not stalling the economy? And that's the challenge going ahead. I think in terms of the government, I think they might be pinning their hopes on some rate cuts coming up. And also on hopes that, inflation is trending lower, 4% now in the UK, still well above the 2% target, but well down from the 11% peak. So I think, a lot of central banks are sort of, hoping we are sort of closer to the end rather than the beginning in terms of this rate cut or rate hiking cycle, and that rate cuts could be on the way soon.
Interesting. We are also seeing sterling weakening against both the dollar and the euro. And just as you were saying, what do you think the Bank of England will do at this point? Do you expect it to be the first central bank in the West to start cutting? Could it be the case?
It could well be the first to pull the trigger. And that's, I guess, the decision that needs to be made. The risk is, if they do start to cut rates now, they risk inflation starting to head north again. And the other risk for the UK's economy right now is that while they are in a technical recession, there are price pressures still. For example, wage growth is still quite high. It is trending down, but still above the inflation rate. So real wages are growing. And so if they do start to loosen rates too fast, there is a risk to that as well. So it's a tough position that the BOE are in. But they certainly could be front of the line when it comes to central banks to start looking to cut rates first.
Do you think this is going to be a full-blown recession or a more shallow period of economic depression, let's say, given the outlook of unemployment and other macroeconomic indicators? What do you think?
Well, if we look at the UK's GDP last year, very weak, weaker since 2009, but I think we're in a better shape now versus then, which was the GFC. So I think certainly the broader hope, and certainly indications are that this would be more of a shallow variety recession. And if we look at the US, for example, the economic growth is ticking along quite nicely there. Hard landing hopes have faded to more of a soft landing or no landing scenario. And if that is the case, then a positive US economic environment would bode well for the global economy and cushion the blow for some of these other economies which are doing worse at the moment, such as the UK and Japan. So at this stage, the hopes are to be shallow rather than severe, but there's a lot to play out for the rest of 2020.
Fair enough. And just one last quick point on Japan, because we also saw Japan slipping into recession, a difference being that was very much unexpected. What's driving that?
I think, well, obviously a weak Japanese yen is playing into that. Now, the weaker yen is helping some parts of the economy, such as the exporters, but hurting the import section. So there's a bit of give and take there in terms of that weaker yen story. I also think that the sluggish Chinese growth is playing into that as well. We've seen weak domestic demand in China and weak demand for exports. And so we've seen that issue affect the German economy and also Japan at the moment. And of course, the Bank of Japan, they're a little bit limited in what they can do at the moment. Obviously, they've already got negative rates. So there's not too much they can do on the downside to ease the pressures there. If anything, their next move will be higher. So they're in a bit of a tough spot as well. But yeah, a little bit unexpected, that news about Japan, but certainly not impacting their stock market at the moment, which is doing quite well, thanks to those exports.
That's true. Great insights, Tim Water. Thank you for being with us.
Thank you.
And now a quick look at some of the other top stories from around the world. JP Morgan Asset Management and State Street Global Advisors, collectively managing almost $7 trillion in assets, have announced their withdrawal from a climate change investor initiative. The companies haven't renewed their membership in Climate Action 100+, which seeks to pressure companies to cut the reduction of carbon emissions. Cuba is giving 400,000 doctors, nurses and technicians incentive bonuses in a bid to stop healthcare workers leaving the country. The island nation has been dealing with sky-high inflation and shortages since the pandemic, plus a tightening of US sanctions since 2021. The circumstances have pushed almost 5% of the population to flee in the biggest wave of emigration since Fidel Castro's revolution. ChatGPT maker OpenAI has unveiled its new generative AI model, Sora. The text-to-video features creates high-definition video clips up to a minute long from text or still images and can extend existing videos and fill in missing frames. Analysts say video could be the next frontier for generative AI now that chatbots and image generators have made their way into the consumer and business world. And the US Securities and Exchange Commission has approved a merger between Donald Trump's media company and a blank check acquisition vehicle in a deal that values Trump's social media company Truth Social at as much as $10 billion, despite its operational losses and smaller user base compared to Elon Musk's X. The deal's valuation has surged as Trump's political influence grows.